Hey everyone, it's Mason Bleasdell. I hope y'all are having a wonderful evening this Friday, and I do want to wish you all a great weekend also. Just want to make this video real quick to kind of update on what we're seeing in the market, both statistically as well as what I'm seeing from experience dealing with this day to day. Two real points with this video. First one, I do think is an interesting statistic. So in the last 7 days, this has really caught up for the first time in a good few months. We've seen just over 1,000 new listings, and we've seen just barely under 1,000 new pending contracts. Again, this is the first time in a few months that we've seen that number be close. For a past little while, we've had significantly more listings than we have new homes listed under contract. I do think that's a very good sign. Obviously now school has started, we're past Labor Day, kind of getting into that rhythm of fall, rhythm of school starting again. So not to say that this isn't expected, but it's definitely a little bit of a light, in my opinion, towards the end of the tunnel. That said though, in that same time period, a little over 2,000 homes have had price drops. And that leads me into the second thing I really wanted to chat about today. Obviously, interest rates have been a huge one. The last time I did this video, if you had a 740 credit score and other good qualifiers, obviously there's a lot that goes into this. But you could see rates right around 5.875%, maybe 6, but just in that ballpark. Currently, rates are about 6.5, and it's been 2 weeks, I think, since the last time I mentioned this on video. What does that mean? So that really goes into a few different things. If you've been watching the financial news, you'll see that the Fed is meeting next week. Now, the real estate market for mortgages does not directly correlate with the Fed moving their rate. A lot of real estate is going to be in anticipation of. If you go under contract today, yes, you can lock your rate, but that loan's not actually given to you and is not traded on the secondary market until the home actually closes, funds, all the paperwork's processed. There's obviously a lot of processes that go into it. But what that does mean is typically mortgage rates will go up faster than the Fed rate if they are anticipated to increase. Right now, no one's really sure what the Fed rate is going to do after the meeting this week. There's been talk about even up to a point increase. Obviously, I really do hope that does not happen because the rates as of right now for mortgages are currently the highest they've been since 2009. So home affordability, interest rates are double what they were 6-7 months ago. So that obviously makes a huge, huge difference. We do also live in Texas. This is a high property tax rate state just because we don't have a state income tax. Anyways, it'll be really interesting to see what happens this week. Interest rates are high. If the Fed does not increase rate for banks to borrow money as much as we anticipate them going to, perhaps that can bring mortgage rates back down. Hopefully they can settle a little bit next week. Obviously, that would be a good thing. But hopefully this was a quick little market update. Hopefully this keeps you informed. Hopefully this was a good resource for you. Hopefully you learned something a little bit today. Again, I do wish you all a great weekend. I do have a couple open houses. I'll include the addresses and times for those down below. So if you're looking around Round Rock and Huttos particularly, I will hopefully see you there. Anyways, I'll catch you guys in the next one. Take care.